how do you become an e-commerce giant? By charging your sellers absolutely nothing. It sounds kind of crazy, right? Well, that's the whole paradox of Meesho. And today, we're going to dig into how they're actually making it work. Get this, 1 out of every 6 people in India shops on Meesho. Just let that sink in for a second. We're not talking about some niche little app here. This thing is a massive part of how India shops. And yeah, the numbers definitely back this up. We're talking 234 million people buying stuff in just 1 year. That's a user base that puts them right up there with the heavyweights. So that brings us right back to the big question. How on earth does a company this huge charge its sellers $0? It just doesn't seem to add up. Where's the money coming from? Let's get into it. Okay, so to figure this out, we first have to break down their actual business model. At its heart, Meesho is more than just a place to buy and sell stuff. It's a whole ecosystem. You've got the shoppers and the sellers, of course, but you also have logistics companies and even content creators all in the mix. And here is the real trick, the secret sauce. When you buy something on Meesho, most of that money goes straight to the seller. Meesho doesn't take a commission from the sale itself. Instead, they make their money by selling other services, things like shipping or helping sellers advertise their products. So there's our answer. The money isn't from sales commissions. It's from all these extra value-added services. That is the key. All right, but what's really fascinating is how this model does more than just bring in cash. It actually fuels this incredible, powerful cycle of growth. The concept we need to understand here is called the flywheel effect. Think about it like pushing a giant, heavy wheel. It's tough to get started, but once it's spinning, it builds its own momentum and just gets faster and faster. And Meesho, well, they've built a few of these. Okay, so this is their main flywheel. The zero commission thing, it's like a magnet for sellers, especially the smaller ones who can't afford big fees. More sellers mean what? More products and usually better prices. And those low prices pull in tons of new users. And what do all those users do? They attract even more sellers. You see? The whole thing just repeats and gets bigger and faster. But wait, there's more. They added a second flywheel with their own logistics platform, Valmo. By taking control of their own shipping, they slash costs. They can pass those savings on, which makes prices even lower for us shoppers, which, you guessed it, just adds more energy to that first big flywheel. So what happens when you have these flywheels spinning like crazy? You get explosive growth. I mean, the number of orders basically doubled in 2 years. We're talking over 1.8 billion orders. That's just wild. Okay, but here's where the plot thickens. This kind of insane growth is amazing, but it raises a huge, huge question about the money. Can it actually pay the bills? And yeah, here's the catch. For all that momentum, Meesho isn't profitable. Not yet. Their EBITDA margin, which is a good way to look at how profitable the core business is, was still in the negative for fiscal year 25. Turns out, growing this fast costs a ton of money. So this is the central conflict, right? You've got mind-blowing user growth on one side and deep financial losses on the other. It's a real tug-of-war. And analysts are pointing this out. As this note from Incred Equity says, getting to a point where they're consistently profitable, well, that's still pretty far off. So you've got to be asking, if profits are so far away, why are people still so excited about this company? Well, to get that, we need to zoom out and look at the bigger picture. And this is absolutely crucial. Meesho isn't fighting for customers in the big metro cities. No, their playground is the tier 2 and smaller towns and the giant market for unbranded goods. Remember all those small sellers? This is where they live. And this is exactly where the next big boom in Indian retail is going to happen. Which brings us to the ultimate test. What did the market think when Meesho went public? Let's look at the IPO. And the answer was pretty clear. The market was hyped. The stock shot up on day 1, opening with a 46% premium, a huge vote of confidence. So why all the excitement? Well, part of it was the price tag. If you look at how it was valued compared to its competitors, Meesho looked like a pretty good deal. At 5.3 times its sales, investors were basically getting more bang for their buck compared to other big names in the space. Because of that attractive valuation, the analyst's recommendation was clear. Subscribe, at least for the short-term pop. And really, this is what it all comes down to. You have the classic investor dilemma. The bull case, the argument for Meesho, is that it's a totally unique model with insane scale, perfectly positioned for India's next growth wave. The bear case, that the numbers are just too messy and the road to actually making a profit is way too long and uncertain. So that leaves us with the big, multi-billion-dollar question: is explosive growth in a massive untapped market enough? Is it enough to bet that profits will eventually follow? That's the gamble investors are taking, and honestly, only time is going to tell us how it plays out.